So hello, how's everybody doing? So I hope we're all having an awesome weekend. This is 50 pips, rocking and rolling here, doing this outlook for the week. It's the 27/07/2014. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. The fact you're listening to this means you've read, you understand, you accept all disclosure disclaimers on the site, understanding that this is just some technical analysis for educational purposes only. So what's going on? Keep in mind that we have a semi-interesting week in terms on the data front, and it's the last week of the month. Essentially, more and more people will be going on holiday following this week. So we do have some scattered news points here and there. Really, the focus is going to be, we do have the CPI out of Germany on Wednesday, but really the focus is on the FOMC statement on Wednesday. Then Thursday we have CPI out of the EU, but we've got those unemployment claims, and then really the PMIs overnight in China for Friday's session, and the unemployment rate with non-farm payroll changes on Friday out of the US. So again, keep in mind, could be an interesting week. We definitely have the opportunity for volatility to pick up, and also some of the pairs and the indexes are an interesting points going into the week. So let's keep this short and simple as usual. And let's start with the ES. What we said on the ES basically is to be patient, that this looked like it wanted to keep on breaking higher, but we're going to patiently look for opportunities to get short failures at new highs, right? I'm not going to discuss it here in detail, but we talked about it even looking back on the whole of the whole of last year, how we had some very interesting daily reversal chances to get short for the patient trader, and this is exactly one of them, right? You got new break, new highs, got that negative close at highs, and nice little sell-off on Friday off of that. Now the big question is, are we going to get continuation or not? In terms of the broader picture, irrespective of the fact that we had a nice little chance to get short and see if we get some Momo here, is that those 1978s and 1949s are likely what are going to continue to be pivotal for action. So what that means is going into the week and also past that Wednesday, daily closes above will likely mean we'll hold a bid tone, and we'll continue to try to move aggressively and try and take out that famous or infamous 2000 level, right? Or if we get a move back down and we hold below those 1978s, we should get some kind of retracement. And what would be healthy for starters would be to see a move back down towards those 1949s, 1950s. Clearly, outside those ranges are needed to potentially get a lot more aggressive moves, but broadly speaking, as long as we stay contained inside that area, chopping around that area, that would be in line with broadly speaking, some kind of summer chop outlook, right? In terms of gold, unless we really start to get some movement out of the equity side, we'd expect it to continue to hover around this 1300 level. That's the 200 DMA. We also talked about the fact that it was a 50 back of this most recent move. So you see essentially market is chopping around that 1300. We got 1350s to the upside and 1250s to the downside. And broadly speaking, we'd expect it to stay in range, right? Probably waiting to see something really take force in the equity side. And unless something drastic happens, maybe also in terms of geopolitical risk, we'd expect it to just stay relatively range bound inside this broader chop zone, okay? A lot of people keep on asking me about the yen, and as far as I'm concerned, what we said the yen is there's not a lot going on. Broadly speaking, we've got this big area, and unless we really get traction outside these zones, it's fairly choppy. I don't think it's too interesting unless you're trying to get yourself into some kind of position trade, right? And you can also see, if you look, we've got a more tactical chart. It's very tricky because you see it's consolidating here. You've got two kind of wedge action here, and the tricky thing is, even if we break outside here and we break back above the 200 DMA, we've got more resistance, and that's a big pivotal level. If we break outside here to the downside, we go into that 170s, 180s, we got another big level. If we break down to the downside, there's another big support. So clearly it's just a very choppy range, and it's just unless we really get some kind of geopolitical risk hit the wires, or we get something important change, in terms of out of the Fed or something, or some other central bank regarding rates, expect this to continue to chop here. So I suspect, the bigger longs are already in their positions, the bigger shorts are already in their positions. So there's not a lot of edge here unless you're trying to scalp this intraday. It's not something that would be too interesting for me. The other pair a lot of people have been asking me about is CAD. And CAD basically, if you look at the weekly, we came back down here and we said it's holding heavy, but if it's going to catch a bid somewhere, we'd expect it to catch a bid inside that 0660s 05 range. Okay, it's a pretty wide range, but you can see back on the weekly how this area was important in the past. Very, very important previous resistance zone, acting as support if this break is going to be a strong one, right? So previous resistance acts as support, continues to act as support if this is going to be a solid break back to the upside. So the fight is really on because the longs came in where they had to come in and need to try and hold these lows for the press higher and the continuation of the break higher. However, if you look at it on a daily perspective, you can see that clearly here, we're right back into that 200 DMA and you've got that 100 DMA. So there's a lot of levels that the shorts will try to defend. And even if you look at it to the downside, right, there's clearly, pressure's still on. So this week is going to be very interesting in terms of how we behave here. What I would suspect is that in terms of the weekly, end of the week, if we end up closing below this 200 DMA, it's going to continue to hold a heavy tone and we'll probably need to challenge these levels, maybe make our way back down into the 103.30s, 103.50s zone. However, if we close the week or towards the end of the week, we're trading back above that 109.50s, 109.80s, clearly that move back up is going to have a lot more strength. So I think those are the two key zones to watch for the week, and watch on how, the question I was getting were more on a longer term outlook or discussion on it. So I think those are the levels you want to watch towards the end of this week. Also, this is an important week, probably the last big week, end of the month, and then we're going into August trade. Okay, so those are the levels I'd keep on my chart there. Then in terms of cable, what's going on cable? Well, cable, we talked about this basically 70-60s being pivotal, right? We had those repeated failures at highs, and we said that once you get those repeated failures at highs, you can look at finding a range hold here, and as long as this base held, this could still continue moving higher in extension. But because of all these failures at highs, if we started to come back down and we couldn't hold these 70-60s, right? We tried to hold it here, and that was a nice little move. But because of these repeated failures at highs, this is not something you want to try and catch aggressively, especially not into the end of the month. Once it comes back down, market tries to catch it one last time, it goes back down. This is just a steady grind, and you see we'd expected the next pocket of support to come around the 69.90s, and it didn't really matter. No real buyers came in, it held heavy, and now it's holding below this level, which is the next pivotal zone. So going into the week, as long as we hold below this area, expect this to continue to trade with a heavy tone and most likely try and make its way back down to these next levels, right? So basically we're talking about 69.50 and then 69.10s. So those are the levels clearly going to be attracting, right? If going into the week, well, then we see this catch a bid tone early and we trade back above the 69.90s, the 170 level, we could see it trying to attempt to move back above towards that 60-70s. But unless we get a daily close above there, it's going to continue to hold a fairly heavy tone. So that's what I'm looking at, for more sustained traction to the downside, especially in terms of weekly close. We close back below here, this is going to continue to trade very, very heavy, and we'd expect that the next level that would be attracting would be that bigger retracement back into the 60, 68s, etc. But clearly there's a lot of important levels to watch here, and it'll be interesting to see how it trades at the beginning of the week. Last but not least, what's going on euro? So euro, we've seen, I posted this chart early and I said, you know, keep an eye on what's going to happen on the weekly, because at a certain point we had an opportunity, we had a chance to see this bounce, and you know, the weekly could have closed positive and that would have been very, very bullish sign. Here the weekly closed right at its low. It's very heavy. You can see we talked about on the daily, we spent a lot of time talking about action around, you know, I think everybody and their grandmother and hamsters were talking about the 137, 135 zone. Once we got, you know, these levels being protected, once we broke here after this first attempt to catch it, tried to catch it again here, but then, you know, even the bids trying to support those 34.75s, very, very tricky. And we said daily closes below there, it's going to start to trade very heavy. You know, we did have those daily closes below those 14.75s. So right here, the risk is for continuation to the downside, right? The levels, but keep in mind, there's a lot of support, right? So there's a lot of support. So it's heavy, it's closing heavy. Watch how it opens tonight, but clearly what's attracting to the downside, we're going to have these 32.90s, so you can call it 33s attracting to the downside, and a break below that, you'll have the 30.20s, 30.30s attracting, right? So those are clearly going to be big levels to the downside if we continue to get some downside Momo. But don't forget that we're going into summer trade, and keep in mind that we've got two very big, a very big test here, right? We've come right back into this 100 and the 200 on the weekly, right? Where are these two coming in? So basically the 100 is pretty much coming in exactly where we're trading now, you know, these 34.26s, and the 200 is coming down pretty much at 33.50, right? So I would expect that zone to catch a bid, and unless something in terms of geopolitical risk, something out of on FOMC, or something drastic changes the current market assumption, I would expect us to see this catch a bid. And you know, especially if we go towards the, you know, the summer chop in August, price to stay supported around that area. For this to be what we call pressure off, you know, we really need to see this closing day trading back above the 35, and then the big level is going to be that 37. So any pop higher, 35 and 37s are going to be the big levels to reckon with. To the downside, the next levels are pretty much that 32.90 and then 30.20s. You know, this could trade very heavy. But the main message here is, don't forget that we've got two important tests here, the 100 and the 200 on the weekly. So I would really keep them in mind, and I would not underestimate the importance of those, okay? So I hope everybody's having an awesome weekend. I hope everybody has an awesome rest of the weekend wherever you may be. I hope you enjoyed the quick update, and I'll post it up in a couple of seconds. So hope to see you guys on Twitter. Have an awesome one. Thanks for listening. Bye-bye, guys.